Thank you for joining us this Friday, the 18th of February. I'm Sophia, a market analyst with Bell Direct. Well, reporting season is in full swing this week. Today we'll cover Bell Potter's views on the companies that reported this week, as well as recommendations by other brokers. We'll also cover the recent economic news and what to watch next week. To start, let's take a look at the week so far. Monday to Thursday, the ASX 200 has gained more than 1%. Healthcare has rallied more than 7% week to date, boosted by a strong report from CSL. Real estate, consumer staples, utilities, energy, industrials, and the banks have also advanced. The ASX 200 was led by metal and electronics recycling company Sims, SGM. Its shares have gained over 20% following a very strong half-year report that displayed substantial growth in sales revenue and operating cash flows and profits compared to the same time last year. The company is well positioned in the decarbonisation of global metal production, and brokers are positive on the stock. Macquarie and Credit Suisse have an outperform rating, while Citi, UBS and Ord Minnett have a buy rating. Gold miners are also among the best performing stocks. Silver Lake Resources, Northern Star Resources and Evolution Mining all gained as the gold price rose. EVN also reported a reduction in revenue and earnings this week. Its price fell following the report on Wednesday, however is higher since then and has gained over 11% week to date. Morgans downgraded EVN to a hold, Macquarie downgraded to neutral and Credit Suisse downgraded to underperform. Meanwhile, Novonix, NVX and Net Wealth Group NWL declined the most, both nearly 14% lower. And the major mining stocks Fortescue Metals, Mineral Resources, Pilbara Minerals and Chalice Mining took a hit this week. On Monday, Mineral Resources reported a loss in revenue and statutory profit. Its earnings were impacted by the collapse in iron ore prices. However, Bell Potter maintained their buy rating on MIN and have increased their price target from $50.45 to $61.35. And Fortescue Metals reported record production volumes. However, revenue, EBIT and earnings were lower, reflective of higher operating costs and iron ore prices retreating from record highs. Bell Potter have a hold rating on FMG and have increased their price target from $18.33 to $19.09. Morgans and Ord Minnett also maintain a hold rating. Macquarie downgraded to neutral, while Citi and UBS rate FMG as a sell. The All Ords have gained 0.8%, weighed down by investment company Praemium PPS. Its price has tumbled more than 30% after reporting a heavy profit loss. However, Ord Minnett retained their buy rating on the expectation of ongoing strong revenue momentum, improving margins and potential corporate interest. Adore Beauty, ABY's earnings also disappointed the market. Its price dropped 15% this week. However, UBS rated ABY as a buy and Morgan Stanley rated the stock overweight. And the most traded stocks by Bell Direct clients this week included Rio Tinto ahead of its report to be released on Wednesday. JB Hi-Fi, who announced a $250 million share buyback, and Bell Potter say JBH is a hold. CSL, which gained this week off the back of positive broker recommendations following its earnings report. Westpac WBC was another highly traded stock, as was BHP, which reported improved revenues, profits and dividend. Clients also bought into Fortescue Metals, Wesfarmers and AVZ Minerals, while took profits from NAB and CBA. Now, during reporting season, the market is very responsive to broker recommendations and how the company reports when compared to what the market was expecting. To identify the outperformers this reporting season, watch if the numbers are better than expected, as they'll likely see their share prices rally. If they're weaker or the company guides that there'll be a drop in earnings for the year ahead, its prices will likely fall. If a company reports strong profits but misses consensus, its price may be negatively impacted. Prices could also fall if the company makes a surprise announcement or reports unexpected figures. Now, it is an important time to identify companies with long-term value or to learn more about a stock before making an investment decision. Now, 50% of companies that have reported so far beat expectations and 34% are in line with expectations. So companies that have beat expectations this week include Bendigo and Adelaide Bank, BEN, whose cash earnings exceeded consensus forecasts. The underlying net interest margin, while declining, proved slightly better than expectations thanks to lower costs. BEN is a Macquarie buy. BHP's record profit beat earnings forecast due to strong coal and iron ore prices. Despite strong cash flow generation, a fall in debt surprised the brokers, leading to better than expected dividend. BHP is also a Macquarie buy. And Temple & Webster, there were concerns over de-escalating growth of TWE heading into the company's result. However, growing active customers and higher repeat customers drove the numbers to beat expectations. Now, for companies to look out for next week, some include BlueScope Steel. Bell Potter expect NPAT of $1.630 billion. Pilbara Minerals, Bell Potter's expected NPAT is $1.37 billion. And other companies reporting include Coles, Charter Hall, St. Barbara, Worley, Woolworths, Flight Centre and Qantas, just to name a few. Now, on Bell Direct's website, you can access our interactive reporting season calendar, as well as a full list of Bell Potter's forecasts and recommendations. And lastly, in economic news, the unemployment rate came out this week, remaining unchanged at 4.2% in January. That's its lowest level since August 2008. Employment rose by 13,000 people to a new record high of 13.26 million, compared to market forecasts of no growth. More people than usual took annual leave and sick leave in the first 2 weeks of January, which saw a large fall of 8.8% in hours worked. Now, this was due to the large spike in Omicron cases that we saw at that time. Economic data to look out for next week includes manufacturing and services Flash PMI out on Monday. Now, Flash PMI is a forward-looking estimate of the final PMI, which is set to be released the week after. And a reminder that PMI above 50 represents an expansion from the month prior. Now, that is all we have time for this week. I'm Sophia Mavridis with Bell Direct. Have a great day and happy trading.